Want to protect your personal assets while running a business? Let's dive into the power of the corporate veil. Think of it as this invisible shield protecting your personal assets from business debts and lawsuits. It's the difference between losing just your business or everything. Your car, your house, your savings, everything you've worked so hard for. We'll break down this legal superhero, the corporate veil, in a way that's easy to understand. I'm going to walk you through how it works, why it's crucial, and most importantly, how to make sure it stays strong so you can have peace of mind. Understanding how to use the corporate veil to your advantage is one of the smartest moves you can make as an entrepreneur. So let's get started. What exactly is this corporate veil everyone's talking about? In simplest terms, it's a legal concept that separates your business from you personally. Imagine a curtain separating your business world from your personal life. That's the corporate veil. If your business incurs debt or gets sued, creditors and lawsuit-hungry lawyers can typically only go after your business assets, not your personal ones. That means your house, your car, your personal bank accounts all stay safe. This separation is why you hear people say things like, "I'm incorporating to protect my personal assets." They're talking about setting up this corporate veil. But here's the catch. It's not just about incorporating. You've got to maintain that separation, keep that veil strong, and that's what we're going to dive into next. Here's where it gets interesting. The law actually treats a corporation as its own separate entity. It's wild, I know, but think about it. A corporation can own property, enter into contracts, sue, and be sued. All stuff you do as an individual. Now, this separate entity status is super important because it's the foundation of the corporate veil's protection. The law sees your business and you as two distinct entities. So, if your business messes up, you're usually off the hook personally. Pretty neat, huh? But hold on, there are rules. The law says you have to treat the corporation as a separate entity too. That means no using company funds for personal vacations or mixing business and personal expenses. Keep it separate. We'll get into the do's and don'ts of this later. Now let's talk about how to keep that corporate veil strong and impenetrable. Remember those rules I mentioned? They're called corporate formalities, and they're crucial for maintaining that separation between you and your business. Think of it like this. The law gives you this awesome protection, this veil, but it's like a magical cloak that needs constant upkeep. Corporate formalities are like the spells that keep that cloak strong. What kind of spells are we talking about? Well, we're talking about holding regular meetings, keeping meticulous records of your business transactions, and making sure all contracts and agreements are signed in the name of the corporation, not you personally. These formalities show the world that your corporation is legit, that it's operating independently, and it deserves that separate entity status. So, we've talked about the awesomeness of the corporate veil and how it protects you. But like any good superhero story, there's a villain. And in this case, it's called piercing the corporate veil. Remember that separation we talked about? That distinct line between you and your business? Well, piercing the veil happens when a court decides to disregard that separation and hold you personally liable for your business debts or lawsuits. It's like that magical cloak suddenly vanishing, leaving you exposed. Now, courts don't just go around piercing veils for fun. They do it when they see that the separation between you and your business was an illusion all along. They're looking for signs that you've been treating the company like your personal piggy bank, or that you've been using it to commit fraud or other shady business. Let's talk about some real-life examples of when courts decide to pierce the corporate veil. Imagine this. You own a construction company, and you decide to use company funds to buy yourself a fancy new sports car, listing it as a company expense. You get into an accident in that very car, and the injured party sues your company. But guess what? The court sees right through your company expense charade. They see you've been treating company funds as your own and decide to pierce the corporate veil, holding you personally liable for the damages. Ouch, right? Another way you can get into trouble is by not keeping your business and personal finances separate. Let's say you've been paying your personal credit card bills with company funds. If your company faces financial trouble, creditors could argue that you were using the company as your personal slush fund, and bam, pierced veil. We've touched on it a bit, but let's dive deeper into the dangerous world of commingling funds. This is one of the biggest mistakes entrepreneurs make, and it's a surefire way to attract those veil-piercing judges. Commingling is like mixing oil and water. They just don't belong together. It happens when you blur the lines between your personal and business finances. Think using your business account to pay for your kids' braces, or depositing that side hustle cash into your company account without proper accounting. Why is this so bad? Well, it goes back to that whole separate entity thing. By commingling funds, you're basically saying to the court, hey, my business and I, we're the same thing. No separation here. And when you do that, you're basically handing them a sword to pierce your precious veil. Now that we've scared you straight with tales of pierced veils, let's talk about how to make yours unbreakable. It's all about being proactive, being disciplined, and treating your corporation with the respect it deserves. First and foremost, separate your finances like it's your job, because it is. Open separate bank accounts and credit cards for your business, and keep them meticulously separate. Think of them as two different universes that should never collide. Next up, document everything. Keep detailed records of all your business transactions, meeting minutes, and correspondence. This paper trail is like a force field around your veil, proving that your corporation is legit and operating independently. Your social security number is like the key to your financial kingdom. It's unique to you, and it should never, ever be used for your corporation. Remember, we're building a fortress of separation here, and that includes keeping your personal and corporate identities distinct. Using your SSN for business activities is like leaving a welcome mat out for liability. It creates a direct link between you and your business in the eyes of the law, making it much easier for them to pierce that veil. Instead, get your corporation its own employer identification number, EIN, from the IRS. Think of it as your corporation's social security number. It's how the government identifies and taxes your business, and it's a crucial step in maintaining that all-important separation. Think of your corporate veil as a car. You wouldn't just buy a car and never service it, right? You need to keep up with regular maintenance to keep it running smoothly. Well, the same goes for your corporate veil. Every state has different rules and regulations for corporations and LLCs, but they all require some form of annual registration and reporting. This usually involves filing paperwork and paying a fee to keep your corporation in good standing with the state. Now, I know paperwork isn't the most exciting thing, but trust me, it's crucial for maintaining that separation between you and your business. By staying on top of your annual requirements, you're proving to the world that your corporation is legitimate, active, and deserving of that protective veil. We've talked about the dangers of commingling funds, but let's get granular. To keep your corporate veil strong, you need to create distinct financial universes for your business and personal life. Think of it as building a wall between your personal and business finances. Start with separate bank accounts. Don't even think about using your personal account for business transactions or vice versa. This is non-negotiable. Next, get separate credit cards. This not only helps you track expenses more easily, but also protects your personal credit from any business debts or mishaps. And don't forget about expenses. Always reimburse yourself from your business account for any business-related expenses you incur personally, and vice versa. Keep those financial worlds separate and distinct. I know, paperwork and meetings might seem like a drag, but trust me, they're essential for maintaining your corporate veil's integrity. Remember those corporate formalities we talked about? Well, this is where they come into play. Hold regular meetings, even if it's just you and your laptop. Document these meetings with minutes that outline key decisions and discussions. This shows the world that your corporation is active, functioning, and making decisions independently of you. Keep meticulous records of all your business transactions, contracts, and agreements. File everything neatly and make sure it's easily accessible. This paper trail is your best friend in court if anyone ever questions the legitimacy of your corporation. Now let's talk about the different flavors of business entities and how they stack up in the asset protection arena. The two most popular contenders are LLCs, limited liability companies, and corporations. LLCs are like the cool, flexible younger sibling. They offer great asset protection and are relatively easy to set up and maintain. Plus, they offer something called pass-through taxation. meaning your business profits and losses are reported on your personal income tax return, avoiding the dreaded double taxation of corporations. Corporations, on the other hand, are like the more established, traditional older sibling. They offer the strongest liability protection, but come with more complex rules and regulations. They're also subject to double taxation, meaning the corporation's profits are taxed once at the corporate level and again when distributed to shareholders. Want to access funding without putting your personal assets on the line? That's where the magic of corporate credit comes in. It's like having a separate credit score for your business, allowing you to borrow money, secure lines of credit, and even get those shiny business credit cards, all without putting your personal credit history at risk. The best part? Building strong corporate credit can actually enhance your chances of securing funding with more favorable terms and lower interest rates. Lenders love seeing that you are a responsible borrower, and having a solid corporate credit history shows them that you mean business, literally. But here's the catch. Building corporate credit takes time, effort, and a sprinkle of strategy. You need to establish your business as its own entity in the eyes of credit bureaus and lenders. Now let's talk about the holy grail of corporate credit. Securing funding without putting your personal assets at risk through personal guarantees. It's like finding a pot of gold at the end of the entrepreneurial rainbow. While it's not always easy, especially for startups and new businesses, there are ways to navigate the lending landscape and secure funding without having to sign your life away with a personal guarantee. One strategy is to focus on building strong relationships with lenders who cater to startups and small businesses. These lenders often have more flexible underwriting criteria and are more willing to consider factors beyond personal guarantees, such as your business plan, revenue projections, and industry experience. One of the best ways to start building your corporate credit is by working with vendors who report to business credit bureaus. These vendors are like secret agents for your creditworthiness, providing positive data points to the credit bureaus, which in turn boosts your business credit score. Two vendors that come to mind are Staples and Uline. These office supply giants offer net 30 accounts to businesses that meet their credit requirements. This means you can make purchases now and pay for them later, all while building that positive payment history. Remember, consistency is key. Make your payments on time every time and watch as your business credit score starts to climb. Over time, this will open up a world of financing options, allowing you to secure loans, lines of credit, and credit cards, all without putting your personal assets at risk. So there you have it, the ins and outs of the corporate veil and how you can use it to safeguard your hard-earned assets. Remember, building a successful business is about taking risks, but it's also about protecting what you've worked so hard to create. By understanding the power of the corporate veil and implementing the strategies we've discussed, you can enjoy the peace of mind that comes with knowing your personal assets are shielded from business liabilities. Don't forget to subscribe and hit the bell icon for more updates on protecting your business and personal assets. We're here to equip you with the knowledge and tools you need to thrive in the world of entrepreneurship.